Good afternoon and welcome to the FX Daily Wrap-Up. I do apologize for the little bit of a delay. I was actually posting a comment in the chat room here with ForexAnalytix, and that on the squawk I just heard that they're actually expecting possibly two dissenting voters, with Rosengren as one of them, and I was sharing that in the chat room. So I do apologize for the momentary delay for us to go and get started. Obviously, we've gone through the FOMC, still thinking on my head on that per that squawk announcement. But anyway, we had our ECB action today. Actually, the market was already sliding prior to the ECB announcement, and we were dropping down as we went to newer lows and into the teens, and we kind of hold there and rally back up to 20, then down to about 11, and then back up to about the teens again before we made this run down to 111. It looked like, okay, we're going to go in and take out this 111 here. One of the guys in the chat room did go in and share that there was 20 billion in options at the 111 strike. So the market was determined not to go on and yield to that. And certainly we did start to see the market just gently starting to work higher. And then as we started to go beyond some of the levels, one of them, which is 1130, that Blake, while he's vacation, stepped in and offered that, and that was right on the money. He said, before we have to get above 1130 before we can actually make a squeeze. Once we got past 1130, the market started to move in. I jumped in for just a few pips here and there because, like I said, I was really wary. Draghi has always delivered, and I thought, he's going to do everything he can, but I guess that 20 billion in options was going to be too much, even though he did his best to go on and state that they're looking at reviewing additional options that they can do as far as stimulus. And he said all the right words essentially to get the show to knock down, and we didn't. And then as we went through the Q&A, the market started to get a little bit more strength in it. Had a key level here at the 64. The market kind of danced a little bit above it, and then we paired back to come back into the 40s, only for this market to start to reassert itself again. And then we challenged up here to this up area here, 1186. I thought that possibly, and that was part of our bias chart, resistance, which was 1208. I thought we might be able, we had 1180, so I did see that. We did have 1180 as our resistance on the bias chart, but I thought that we could also make it up to 1208. Now I jumped in here around the 64 area, scalped a little bit before it made it up here, but I thought that was, like I said, if you're with us with ForexAnalytix, we post these bias chart levels in the 4 a.m. webinar for the European crossover, and then that gets posted. Stelios records the webinar, runs it again for viewing about an hour and a half before the New York Open. So I've been so enthralled with what was happening initially with the euro, I even forgot that we posted our daily resistance level at 1180, which was a key level. We made it up to what was 1186, but I thought we might be able to knock some stops from people that had stepped in and shorted on the way up. We might be able to clock them all the way up to 1208, but we didn't. We came up short of that. I thought we might be able to go in and maybe clip up there, and we're starting to rotate lower. And look at the dollar on the 2 hour. We had a nice little mini hammer, and the dollar's continued to come back. And look at the dollar yen. So one of the things, as I was mentioning on there, was hearing on the squawk is one of the guys in the chat room was also noted, Barclays sees two FOMC voters potentially dissenting if the Fed attempts to lower rates. And I got this over the squawk actually before that, which was would they expect one of them to be Rosengren? So, it would not surprise me that, that you could see the dollar rally. And I myself have not been a fan of the dollar, but I'm just saying you got to give it its due. We could possibly see the dollar even rally with only a 25 basis point cut. They certainly have priced it in, but I think that the only thing that'll to keep the dollar from, would send it lower is if we saw a 50 basis point cut. I don't think we're going to see a 50 basis point cut. So the 25 is already baked in, and the euro certainly just can't seem to get a lift to save its life. And certainly, like I said, one thing that I thought that might have pared this euro back a little bit, and one of the reasons why I myself jumped out of my scalp shorts and didn't hang on from too long when we got above 1164 was because I was looking at the bunds. Now look at the bunds here. Today we made new all-time lows again. We actually went below the minus 40 basis points in the negative before even the ECB announcement. We went a little bit lower, obviously, i.e. Bunds going higher, but look, we've gone and pulled back here. Now, if we're looking on a daily, we can go in and take a look here on a 2-hour chart here. But you can see here a very nice, almost like a gravestone doji right here. The wick's a little bit long, but not that long. And henceforth, you're seeing this market pull back. I don't think we're seeing a massive reversal or anything, but certainly with the run that this market has had, look at that. Look at this run just since the 15th. A phenomenal run here. So we could certainly see this market pull back to about 172 even. And that's still another 100 ticks away. But like I said, you would have thought that would have been a little bit more supportive, may have spooked some of the euro shorts. Maybe we get all the way up to 1208, but we didn't quite make it up there. We did see gold. Gold made a quick rally right before the ECB announcement. And then we had the announcement. It actually pulled back to about, it got up to like 1433, pulled back down to about 1429. And then once we got into the whole thing with the ECB, as we went through all the different texts, the gold ended up shooting and taking out the highs by about $1, and then turned around and quickly lost $10 in absolute quick order. And then since then, we're still working lower. There's a good chance we make it all the way down towards the 1400. I think around single, my thought was that we could get down there to like around 1408, 1407. Well, now that we failed up here, we may want to press that and maybe test all the way down to this 14 even. That's on the gold spot. We'll go back to the main screen. We did see a pretty good pullback here in the peso. I had not been in the peso on this last round after I had gotten stopped out on that first run back in here. And I came in at a very good price, but when the market pared back, I am glad I did not join back up on this run back up in here. But when we were falling back, I did mention the guys that were shown here. We had support here at this 1898. The market ended up holding up from that area. We dipped just a hair bit below it. And you can see this support coming in right there. And it came in I think came in just a hair under 1898. Actually, 1897.4, 1897.6, and we just dipped below that. We've since recovered, and you can see the dollar. Dollar's just doing exceptionally well, and you can see. Look at the dollar yen on its highs, having turned around things. We had actually put the bias chart here, resistance at 850. We've even gone below beyond the 850. But I do like an area here. I'll just go and point out to you here, which is I'll pull this right back. Right here at this 881. Now, here's the thing: is that the dollar's doing so well, you can really punch them up here. But I think you'll see a pause here against this 881 here with the dollar yen. We talked about this market been meandering, we're just dawdling between the 832, which we've had before as bias chart support for quite a few times, and down to the lower eights. We had a bias chart support here at 778, but now the market's able to wheel around with the strength in the dollar, and we can get some more strength beyond this. And like I said, my thoughts is that we may even see the dollar rally after the FOMC, and we're not that far away when we look at the dollar index. We had our bias chart support for today at 98.10. Resistance, that is, in case the euro, maybe something was, they didn't do anything. Well, they did as much as they could, reasonably speaking, to a certain extent. And the euro, it came back, and so a bit of a disappointment. And you would have thought that the euro would have taken, like I said, up to about down up to about 1208. But that being said, when the euro sold off, I thought we might be able to eclipse and get beyond 111, but we had, as I mentioned, $20 billion worth of options. I thought if we got up there, we'd be looking around this 98.10. But once we get past FOMC, we're not that far away from this 98.37. 97.89 is key resistance. We discussed that on the European crossover webinar this morning. But, we're not that far away. And I'm no fan of the dollar. But I tell you what, the way this thing is holding up, and we get 25 basis point, the market's already got that priced in. We may just try and, go beyond that. And looking here at the dollar CAD, we talked about the dollar CAD the last few days. We talked about the 31.62 area here and a pullback, and that we would find bids at the 31.20 area. The low that day was 31.22. We bounced back up, just hanging around this area. On the daily, it's 31.36. On the 2-hour, we got the 31.42. But we said this market is open to go higher. Now, our bias chart resistance today is the same old level, this 31.62. But the real resistance comes in, and we have the potential for this market to come up to 31.90, and I think we'll go in and be able to blast it. And be careful with that, because like I said, the dollar is really holding up very, very well. And boy, it looks like you're just, reminds me of Blake's analogy of holding a beach ball under the water. You can hold it, but eventually your arms become tired, and boop, the ball just bounces right back up. And that may be just what we're seeing with the dollar here. As I mentioned, we're seeing gold under pressure this time. Like I said, I think that the ECB, they did everything they could that you would have seen the risk on, but we quickly sold off as the market just simply wasn't going to move. I think the euro has fallen so much, but it certainly looks like it will still eventually move lower, but it may move lower once we get past the FOMC, and the dollar might get ahead of steam. Let's go on and move into the cross rates. And boy, did we see a turnaround in the euro yen. Boy, what a move here. We actually came right up in here, right into this pink bar, which I usually put those, they stand out a little bit better. And I know that Blake himself, he's on vacation, but he actually picked up down here and caught a nice little chunk of this on the way up. But you can see quite the move we've gone and seen turn around here in the euro yen. And same thing we saw here with the Euro Aussie. Now, we know that the Aussie's been under a lot of pressure, but boy, we went and blew through that also. And you would think about that considering how weak that the Euro's been here. And one other market that we've been talking about here has been the sterling versus the AUD. And we covered this yesterday here in the daily roundup. And one of the guys in the chat room had mentioned he was looking at short. Where's a good area to go in short? And so I answered that, and I told the guy, hey, look, we just did it on the roundup. If you want to watch the roundup, and what we had here is right there. There's the number we had. 79.53 is what we had on there. 79.53, and you can see here the market got up to what, 79.84, but right now we're trading at 79.19. 79.19. So. That's what I told him. I go, but we talked about this. We've been on if we look on the 2-hour chart, we've been on a buy signal for the last 3 days. So say, hey, be patient, don't force it. So there it was, 79.53, and look, we're now at 79.17. Nice pullback as long as you exercise some patience. For a little while, I was trading the cross rates. I haven't been doing too much with the cross rates lately. I know Amanda does really well with her swing trades. And she does exceptionally well on here. But you can see here that, and we had brought this up on the show. We had, we can, obviously from the 30-minute, we had a good buy. But even here on the 2-hour, look at this buy signal that generated. You see right here? And that's what I'm saying, don't force it too early. And certainly that 79.53 worked out very, very well. We did, supersede that a bit, but you can see we're about 40 pips below that at this time, and actually we've been even been lower. We've been as low as 79.08, so almost to the tune of 50 pips lower, almost from that 79.53 that I offered as an entry if you wanted to go and take it on the short side. Other than that, like I said, I don't think we're going to see a whole lot of action, although the euro continues to weaken, and also here with the Aussie yen finally picking itself up a little bit. We did have the bias chart a little bit lower. I thought it might tick down to the 20. It's kind of held its own here and trying to push it up on the upside. But we'll go to the main screen. For me, I didn't, other than I did my small scalps, I myself didn't do a whole lot. The ECB, I've had, lots of times they come in real quick on a move and then, end up, regretting that. So I was really cautious on here. I did catch a little bit on the downside as I'm thinking, I was telling one of the guys that's trying to think of the story I was saying, but it was just like, it's going to keep on falling anyway. So what the heck? and I grabbed a little bit before the ECB, and then well, not before the ECB, as we were moving down here lower, before before the ECB, but also I caught a little bit right before the whatchamacall, his presser. But on the way back up, we did see a nice little rebound, and one of the guys, Olivier, was jumping on it, and on the, I think it was on the 10-minute chart. We'll take a look at that. We were forming, but I think we were forming a hammer bottom, but I think it ended up just taking off. So we didn't even have the hammer. It was trying to, this bar here was trying to form a hammer. I'm like, well, you know what? Might as well just go with it here. And I only just caught a little bit of it, but some of the guys rode it for a good little chunk of the change. I think I stepped in here and took a short here. And then I also, as I mentioned, the 64 area, it took some shorts just above it. And then once we got here, I'm thinking, no, it's amazing, not amazing, but we're looking at it on a 30-minute. I said, look, this thing has regained on this bar has regained the 64. You can see I had it marked off here. I'm thinking, hey, that might be able to shoot up to to 1208. Although, as I mentioned, our bias chart resistance was at 1180. I thought, you know what, you can make it up to 1208 if they squeeze some of these people that got short on the way up. But no, it didn't. And you can see this market is continuing to work with it. Look at that in the 1130s. But most of the big bang excitement has already come around. You can see the dollar CAD on its highs, the euro dollar on its lows, correspondingly, dollar yen on its highs. We're starting to see this turnaround. So let's see what happens. But it's going to be an interesting day on FOMC day. That's all we have. Thanks for joining us here on the Daily Roundup.